All right, guys, let me know if the mic's working. We had an issue Sunday where it cut out. Let me know if that's working now. I don't know what happened, but Sunday I went through and I think about an hour in, it stopped working. Okay, and I'm not sure what happened, but the timer started over, so I have no idea what happened there. It was winding down, then all of a sudden it started back over. So bear with me while I get this set up because I was trying to figure out what was going on there and not quite set up. So we're going to go over a few things tonight. This is, I let you guys know the other day, last week, that my schedule's kind of weird right now. I've got some projects that I've taken on. We've got family coming in from several different states for the holidays. And I just found out that we're going to have them all here at the house. So I've had to get a lot of stuff done. And so that's why today, yesterday, and tomorrow, I won't be in the morning session. I'll still be trading, but it won't be here. And then Thursday and Friday, we'll be in here. I'll be in here in the morning trading. Next week, there's 2 or 3 days that I won't be in the morning. But after that, I'll be back on my usual schedule. So what I'm going to do is do some night sessions like this, and kind of mix it up a little bit, because I know some people can't make the day sessions anyways because of that nasty thing we call a job, work. So sometimes it gets in the way, and it's unfortunate. So I think I already fixed that stop you were talking about. Yeah, that's been fixed. Okay. All right. So I'm going to jump right over to the chart. We can get it started here. And basically, like I said, we're going to go over a few things. We're going to go over gold. We're going to go over Dow. I'm trying to mix it up a little bit because Sunday was a lot I think there was 15 different instruments, and that's a lot to go over, and not everybody's trading those. So that's why we did the polls about 3 or 4 weeks ago, where we had everybody go in and check what they trade on the polls, and that gave us kind of an idea of what most people are trading, and most people are trading gold. Doesn't mean everybody. So I'm trying to find that happy medium where we cover the things that most people need, but yet we also cover some stuff that maybe a few of you are focusing on, which I know the other is oil. So those were the main two, was gold and oil. A few people trading platinum. A few people are trading indices, not everybody. So I don't like to cover all the indices because some people just aren't trading them. So for me to sit there and cover, S&P, NASDAQ, Russell, Dow, and maybe one person's trading Dow and two people are trading NASDAQ or ES, is a lot to go over. And I feel like we need to focus. I'm trying to focus my time where everybody's hanging out. What instrument is everybody's hanging? Now, few people have mentioned trading Forex. That's where I got started years ago. Forex is different. It moves different. The swings, I like the swings better. So sometimes, like today, you guys didn't even see me. I didn't place any trade even on gold till this evening, till the market reopened. And now I have a small trade on gold where I put 10 contracts on and closed 8. So I didn't need to. That's the thing. So 5 o'clock this morning, 5 a.m., and I'll go over the euro trades, but 5 o'clock this morning, so 5 a.m. Eastern, there was news on the euro dollar. So I knew I was going to trade it. I got up a little bit late. So I hit snooze on my alarm, and I didn't get up till about 15 after, which was fine. The way it had set up, the way it was moving, I decided to go ahead and get in short, and that momentum carried on. So I actually had 2 trades earlier on it, and I'll go over those trades and where my stops were, because that is an issue with a lot of new traders. And I'm going to tell you, one of the secrets is to keep your stop out of the way. I was taught to use swing highs and lows. So when I was taught to trade, it was trend lines. It was highs and lows, which is your support and resistance levels. When you place your stop loss, you use highs and lows. You do not 10 ticket, 20 ticket. You just don't. I'm going to place my stop 4 ticks off my entry every single time I'm get in. You're asking for failure. I mean, you're going to fail long term if you do that. I know a lot of people do. Yes, you may have successful trades, but then you're going to take a lot of losing trades. And you have to look back and say, how many times have I put on a trade and put that 4 tick stop loss on? 5 tick stop loss. I place a trade, put a 4 tick stop loss on. It pulls back, takes me out, and then continues going the way I was in. And it goes, and it goes, and it goes. And you're either sitting out the whole move, or you're trying to catch a moving train. You're trying to jump back in. And a lot of times, sometimes you'll jump in and you'll be okay. Other times you jump in, it pulls right back. You just happen to jump in right before retracement. You can't help that. You can't know when a pair is going to retrace. Now, with highs and lows as our support and resistance level, if something's pulling down and we have a support level down there, okay, a line, and it's moving down toward that line, I certainly wouldn't jump in right before it hits that line because it may pull back. Okay. So that's why we use those highs and lows. So it would be better to see if it breaks that line. If it does, then get in, or wait for it to pull back and then jump in. So you can use that to help you decide when to jump in if something is moving. Of course, it's always best to get in before it moves or right when it starts moving. That being said, sometimes we're not even at the computer yet. We're running to let the dog out, going to get some more coffee, you know, whatever it may be, answering the phone. And then when you get back, the entries happened. You've missed it. You missed what you were waiting for the last half hour. Don't ask me how many times that's happened to me, because down in Florida, when I was trading Forex, I'm a walker when I get on the phone. I'm a walker and a talker. So if you call me, I pick up the phone, I will get up out of my chair and I will walk. I pace when I'm on the phone. It's just something I do and have always done. Someone would call me. It would be 9 o'clock in the morning. I would take the call, which I shouldn't have. I learned later. This is early on. I'd sit there waiting on a setup, nothing set up. I'd take the call. I'd get up and walk. I'd be out in the living room walking through the kitchen, everything else. I'd end the call half hour later, come back, and my setup was gone. I mean, it happened without me. So, and I know I'm not the only one that's experienced that. So then I learned later I blacked out my phone. So my phone goes on do not disturb. I don't even let it ring. It doesn't vibrate. I don't let it do any of that. It is silent and it is on do not disturb. And I don't change that till 11 o'clock in the morning. I don't want any distraction. My wife, don't tell her this, and I know she'll never watch these. She's heard me enough. She listens, but I've told her before, you know, when you call sometimes or text me and want me to respond, it is right in the middle of when I'm trading, you know, either news or whatever. So she's had to learn kind of to deal with that, deal with me, I guess, over the years. So anyways, but that's what you need to use as your stops, is you use highs and lows. You swing highs and lows. You don't tick it, not 4 ticks. You don't put it right to the tippy top of a wick. Never right to the point. You know, give it some room to breathe. I like to go back 2 highs, and we'll go over when we get. I'm only going to cover 4 things tonight because I want to get to. Yeah, because I want to get to the euro. That'll be the last thing we cover. If we can, we'll get to Bitcoin too. If you're trading Bitcoin, let me know. I don't know anyone that's trading it. So let me get back to the charts and we'll start here with gold. All right. Black this out. Something I've got to do is draw a few things, delete a few things on the chart that I didn't do this morning because I wasn't here. So I've kind of left them alone just so you guys can see, and especially the lower part of where gold is. You guys know gold's been in an uptrend. And like I said, I covered all this Sunday, but unfortunately my mic cut out on me. So we really don't need to be concerned with any of this to the left. The only thing we need to be concerned with is this right here. And guys, we should be streaming really well. Let me know if that, if you get any lag. We should have 0 lag anymore. And the chart should look good. So let me know how it looks on your end. We should not have any issues. They finally fixed the internet here. You know, we made the switch over to fiber optics, and I had major issues, and I don't know why. So we've got that fixed, and I also went ahead and bought some new equipment. So I bought another PC, and then I gave my son my old gaming PC, which should have been good enough, but I just didn't want a chance having any more issues. So they got the internet fixed, and with what I did with the machine, we should not have issues anymore. So again, we don't really need to be concerned with anything to the left except for where we are now. And with our zones, you know, we always look to see where an instrument is, and then we will go and find a zone up above, zone down below. Those are the 2 main zones we need. I like to try and find one in the middle somewhere if we can, if that is being respected. If you can't find a zone that's really being respected very well, then leave it off and use some horizontal lines. Okay, so these lines, and we'll look at those. This line here is a 4-hour support resistance line. I included the candle bodies. Okay, so basically you'll see here candle body where this candle closed, this candle, kind of hung out, this candle closed, this candle or opened, this candle closed right there, and then over here this candle pulled up and hit it, this green candle pulled up and hit it. The red candle, it starts where the green one closes, so it's always going to be parallel, or should be, unless there's a gap. So green candle comes up, hits that level, that price point, and then the red candle starts, may have wicked up for a while, but ultimately pulled down. But then this next green candle went up. So we have multiple candles closing, or touch points, if you want to call them, where candles close right at that price point. Okay, so that is a price I want to be aware of. So that's where this line came from. This one here came from basically these candles where this candle closed, opened, but also back here. Okay, so basically this one kind of was up to that level, but not quite. So I chose just to place it there instead of placing it here. Okay, it just drug it down a little bit. So I just chose to put it on that wick. So another price point I need to be aware of. Now, if you look at these, this one here and this one here, it looks like I didn't know what I was doing when I drew those two. But I do, trust me, I do. All right. Also had a downtrend line from this wick up here to that wick, the wick top of this candle. And that, of course, was broken today. That's a 6 a.m. candle today that broke that. So when that candle came up, it basically came up and tested this price level. Okay, and tested that what I have as a yellow zone, which is the top of this, and then just pulled down. So we're falling off of that right now. Where are we going to? Well, right now, where this candle is right now, it's actually below, this close and open here. So I think it's going to keep going short. It may retrace some. That's the only thing. It could retrace some, but right now it has some downward momentum. Pretty strong downward momentum. And I could see it going down to retest the zone. Now, this green zone was broke over here. I left it on the chart. It was broke Monday, 6 a.m. candle again, broke out. And I don't know if you see any patterns, but we have some really good long candles in the mornings during the U.S. session. So this candle came and broke that zone. So that zone is technically not valid anymore. Now, you can gray it out if you want, leave it on the chart, see what it does when it pulls back up, is what I like to do, or I were to turn it yellow. When it broke through here, we would turn that yellow, and then we're looking for a green zone below. We'd actually come back to the left to look to that zone. That time has passed already. So I would leave that on there and leave it yellow. However, it broke back up through. So now that it broke up through, could this hold up later over here? 100%. It could. But what happens is we tend to get a ton of stuff on our charts. And I don't ever want you to get way too much stuff on your chart to where you're just downright confused. I don't know what to do. So always take a look at the 4-hour time frame and then go down to the 1 hour. Those should be your main focus. And then, you might be trading on a 15, 10, 5, or 3. I know a lot of people are trading on a 5 or 3. And I don't ever recommend going to a 1 unless you're trading a news event after news. I just don't. If you stay on a 1-minute time frame, you're pretty much in and out of trades a lot. You tend to not be able to hold. If you're on a 1-minute time frame, the longest you're typically in a trade is somewhere between, I'd say 7 minutes to maybe 20, if it starts trending. So that being said, you have to pick the time frames you want to trade. I would not sit 8 hours a day, 6 hours a day, 5, 4, whatever, and be on a 1 minute time frame, because you're ignoring all the higher time frames is what you're doing. Because I can guarantee you, if you're on a 1 minute time frame trading, you rarely glance out at a larger time frame chart. And this week sometime I'll cover, I think I want to cover something with you guys that I haven't gone over before in years, and that is the multi-time frame charts. I think everybody should be aware always of what's happening on the larger time frame. So even if I'm down on a 3-minute time frame, I know what's going on a 15 and a 1 hour and a 4 hour. Okay. And I'll go over that. So because you can lose sight of what is going on a higher time frame, and you never want to lose sight into what's going on a 4 hour or 60-minute. So this zone, technically, we can take that off. Okay. Now I don't have a lower zone, but I have an area. Okay. I like to find one area below where price is and one area above. Well, the one area above is way up here. And that's something I went over Sunday that I realized, again, my mic cut out, I think about an hour in, and I sit there and went through, and it was, I don't know, 2.5, 3 hours long. So the mic cut out about a third of the way through, and there was no sound. So unfortunately, a lot of that is unusable. And this here, I like to use the wicks. That's what we look for. 4 hour time frame, use a wick. There is no way I'm going to draw my zone that big. There's just no way. It's too big. It was up here somewhere, and now I couldn't even tell you where it was. It was something like that. We'll go down and find it. So, and we're into the same situation down here. I don't want to come in and draw a really big zone. I want to pinpoint a little better where candles may turn. I could put this huge zone here, and I could put this huge zone here, and then you're almost guaranteed. I think everybody would agree that you're guaranteed if it pulls up into this zone somewhere, it could turn. I mean, somewhere, right? Don't really know where. Yeah, I keep forgetting that. Thanks for reminding me. Control Z to undo. I'm gonna go back and find it manually though, so you guys can see. So again, you can, you could say, hey, I can guarantee you. Talk to a trading buddy, whatever, mention it in the Discord. I can guarantee you when it pulls up in that zone, it's going to turn somewhere. Well, where's it going to turn? Okay, that's a huge zone. Is it going to turn, where these candles closed here? Is it going to turn up around that wick? Where do you think the bodies of the candles are going to turn? Well, a 4 hour candle may wick up there again. That may be all it does. It may come up here. It may wick up there. Okay. So it may wick up there, and I don't really care if it does or not. But if it does on a 4 hour time frame, if it wicks up here on a 4 hour time frame, if that's what we see, 4 hour candle comes up here and then goes back and closes. Well, what does that mean? Well, it means that on the lower time frame, it was actually a move. Okay, it was a move up. And that's the thing. So again, 4 hour candle pushing through and pulls back, just like this one here. Okay, this 4 hour candle pushed up, wicked all the way up here, and then came back down. What does that mean to us? Well, that means that we were probably on a 5 minute or 3 minute time frame and traded it long and riding it, and it turned and pulled back during that 4 hour time frame. Okay, so that's all that means. So this is how you can learn to read the charts and tie your time frames together, because it's not always easy. It's easier said than done when you just say, oh yeah, look at a 4 hour, go down to a 1 hour. I say it all the time. Look at a 4 hour, go down to 1 hour, 15-minute time frame. Look at where things are set up. Look at support resistance. Look at trend lines. Do all that. But tying it all together, that's where your mind you have to wrap around the time frames and say, okay, during that 4 hour time frame, basically it had pulled all the way up, pulled all the way back. And then you can dial down to a smaller time frame to see how that actually played out. So again, we have a huge area down here, huge area up here. I don't like the big zones. So what I did was before I drew this one here, and I want to leave my down trend line here. I like to leave them. It's broken. The pair, or I keep saying pair, guys. When you hear me say pair, it's because I'm used to talking about currency pairs. That's all that is. But gold is actually pulling back down to possibly test the backside of this. So I like to leave them when they're broke because that's where you get that test. So if it pulls back down and bounces right in here. So if gold pulls down, because we've been making all-time highs. It just keeps making all-time highs. So would it surprise you? Would it surprise you if gold retraces to one of these levels, okay, or even this one, and decides to turn and make an all-time high? I don't think it would surprise anyone on here if that happens, that trades gold and watches gold. I don't think any of you would be surprised. Now, it could bounce right here. I've got several levels. I got the one here. We got one here. And then we have ultimately one of these trend lines. These are my trend lines that's going up. So ultimately, it could come down in this little pocket area is just what I call it. I don't know if anyone else does or not. So it could come down and turn in this pocket area somewhere, which is where our retracement line, because that's all this is right now, is a retracement. Gold is making all-time highs. You are not going to hear me say that gold is, I'll trade it short. We'll trade the retracements, but you will not hear me say gold is in a downtrend. Gold has been in an uptrend for its entire life. Okay. Does it retrace? Yes, that's what this is. How deep does it retrace? We don't know. You don't know how deep it's going to retrace. This right here, so we had a decent retracement. Look at this big move up here. So it retraced about 38%, okay, which is a fib level. I won't go over fibs. It'll confuse a lot of people. But it pulled, turned, and then we had another move up. Okay, so this is where a lot of people will get confused because right now this pullback here is nothing more than a retracement from this downswing. Okay, so I don't know if it's going to continue or not, but ultimately, again, gold is in an uptrend. So I want to trade, and when I want to max out my contracts, I want to trade long. I want to look to trade long. So any buying opportunity I have, any of my criteria setups that set up that 100%, you better believe I'm going to max out my contracts. Will I trade it short? Yes. If we look on a smaller time frame, and actually I'm already in it short already for tonight after the market open. So I am trading it. I'm trading the short back down to one of these levels. Will it go down to one of these? I hope so because I'm in short, but it doesn't mean it will. But this should not surprise you if it turns at one of these levels and makes a all-time high. Okay. It could break through this trend line and go down. So these are the scenarios you have to be prepared for. Unfortunately, there is no hard, fast rule that basically says every time it does this, it's going to do this. As you can tell, I'm getting all kinds of alerts and will be until I fix all that. So you have to prepare for the if-then. If it does this, we're going to do this. If it does this, it's going to do this. If it comes down into this pocket area and starts turning on a smaller time frame or any of these levels, and I get a higher high, higher low, that's when I'm going to close out my short and get in long. Okay, so let's go back to drawing this zone and this zone. Again, the wick's so long, it's going to be too wide. I don't like them that wide. So we dial down to a 1 hour time frame. So as you look over here, well, that looks good to me. It's not a super wide zone if I draw it off the wick. And that is where I drew this off of, the one that was up already. I just color them red because it's an upper wick. Typically red's going to be sell. With gold, however, you got to keep in mind that if it bounces off the red zone and gives you a lower low, lower high, yes, sell. If it starts moving through the zone, be cautious. Wait for it to come back through and do lower, lower, lower high, because it may go up and make the all-time high. So what we've seen typically here and there is sometimes it's pulled up and hit the zone a couple times, and you've been able to short, and then it's broke through. Okay, it ends up breaking through. This one down here, I haven't even looked at this one on a lower time frame to see. So I'm going to dial it down. We're on a 60. That's still a little wide for me. Because again, when I trade, I will not be on the 60-minute time frame. So I'm going to dial it down. Now on a 15-minute, I see that wick and this double bottom here. And to me, that looks like a good area to draw a zone from. It's a decent size. It's not too big, not too small. I didn't grab the right candle. So something like that. And then just color that one, make it your lower zone, which is green. So I like that, because if gold comes down, if it ends up breaking through, these two lines here in this uptrend line, and we've seen that. We've seen that over the last couple months where it's actually come down, broken a trend line like this, an uptrend line, to retrace a little further, hit a zone, and then it's gone back up. So again, don't let it surprise you, okay? This is the stuff you need to do. This is how you should prep for trading, prep for long-term, what may gold do, and then you have to be ready for that. What are you going to do if that happens? So I'm in short on gold. If it goes through, and I don't even have a down, I think I got a down trend line. I do actually. I have a down trend line on my other chart that goes from here, on my micro chart, that goes from like here down to here. Okay. So again, it goes down through there. If it follows that downward trend line and keeps going through these levels, I'm going to hold. I'm just going to stay in short. I've already closed out partial. I only put 10 on, closed out 8. So I only have 2 left. I'll let them run. If it runs throughout the night, I'm going to hold on. I'll be sleeping anyways. So don't really care. Stops move to break even. Don't really care at this point. It's a winning trade. I can't lose anything against what I have locked in, because my runner's stop is moved to better than break even. Just a little bit. So again, it's not costing me anything to let those run. What it's going to cost me is if it closes out, or if I were to close it out and not stay in and it keeps going short, well, that's going to cost me. That's potential profit right there that I will not be a part of. So now moving my stop to break even, which I don't always do, it could back up and take me out. That's just the risk you take. But I don't like seeing losses on the books. Most all of my losses are if I close partial, leave runners on, and leave my stop where it originally was, and things turn, especially through the night when I'm asleep, and they go back and they stop me out. If I choose to leave my stop out there, then I choose to take that loss. Okay? And I'm just going to say it again. If I choose to leave my stop, let's say you got in there. I think I got to type something in. I'm not going to type. But let's say you got in there and your stop loss is above this high. And the magnet's on. So let's say it's above that high right there. It's going to stick to it. So that's your stop loss. Again, it's moved down. So let's say you put on 10 contracts, you close 8, let's say. You let 2 go, and you leave your stop here. The conscious decision that you make to say, I'm going to leave my stop there, means that you're making the conscious decision to lose that little bit of capital on the 2 runners, let's say, if it pulls all the way back and stops you out. You're making that decision. That has to be a business decision. It's a trade decision. It should be in your trade sheet. Whatever criteria you have to take trades, you also have criteria to manage trades. That's your trade management. And you have to learn trade management just as well as entry criteria. Entry criteria is important. That's what decisions you use to get into a trade. Trade management is also important, if not more important. Once you get in the trade, how do you manage that? That should not be decided when you pull the trigger, when you place the trade. You should know ahead of time. You should know tonight that if you're going to get up, okay, you should know right now, if you're going to trade the London session tonight, how you're going to manage your stops. Are you going to close partial? Or are you just going to move your stop? How far do you want it to move before you move your stop to break even? Or how far do you want it to move and then you're going to close partial but leave your stop? Or how far do you want it to move? You're going to close partial, move your stop halfway to break even. These should all be decisions that you've already made. It's your business plan. How are you going to manage your trades when you get in them? Decide that ahead of time. Write it down on paper, print it out. I'm big on that. Put it in a spreadsheet, print it out, have it by your computer. Okay. So the reason why is you do not want to try and make those decisions on the fly. That's the worst time to make them, is when things are happening. Okay. So that right there is a decision you make. I don't make those all the time. Sometimes I will, and I could, but this is the first. Let's see. I think I traded gold yesterday, and then just tonight. I didn't trade gold today because I was busy on euro. I mean, that's how I traded, and I didn't really need to do anything else after I traded euro this morning. So again, you make the conscious decision that you enter a trade, 10 contracts. It moves X amount. When it moves X amount, how many are you closing out? If you're closing partial, if you want to lock in the money for the day, how many do you close out? 6, 8? Don't make it up as you go. Decide that ahead of time. I'm going to close 8. And then I'm going to leave my stop. Or I'm going to move my stop to break even, couple ticks above break even, and I'm done. I'm going to let it ride till the end of the day. Or I'm going to watch it, and as it's going down a trend line, as it scoots down a trend line, then you're going to move your stop as it goes. As it goes down, you're going to keep moving your stop off of the highs. If it's moving short and you're in a sell position, you will move your stop and keep it above the last high or 2 highs back. If you're going long, if you're in long, then you will sit there and take your stop. Let's just say you took this bounce where it pulled down here and bounced, broke. Let's say you got in when it broke right here. Okay, that's going to be your entry. And again, I'm not typing stuff in here, guys. Let's say that's your entry. Here's your stop. All right. So as it moves, goes up, pulls back, goes up, pulls back, breaks this high again. As it breaks the highs, then you're going to move your closing partial and you're going to move your stop. Move your stop to this high. Okay. Then when it comes up here, pulls back. And then when it goes up, it does not make this low. You cannot say that. Let me open this up a little bit. You cannot say when this pulls back and this green candle's here, you cannot say that is a low because you don't know. You don't see anything to the right. So you have a red candle pull back, you have a green candle. You do not know that is a low point. So you don't know that that's a higher low until it goes up and breaks the previous high. Once, as you can see, it pulled back, you get a turn swing up. When this swing up breaks that high, that is the market structure of a low. It has to break this previous high. That's the market structure of a low. So you're going to move your stop. Okay, when it pulls up there. And again, I say never put it right to the ticker candle. I've got the magnetic thing on. I could turn it off, I guess. That's why it's attaching. Always give it some room. And as you can see, it almost took, if you had it right there to the tick, it almost took you out. Pulls back. Again, we don't see this to the right. We only see the 3 candles back. We have no idea that that is a low point until it comes up and breaks this high. Once it starts moving past that high, you know it's going where? It's going up to make a high. Well, at that point, you move your stop. Okay. Again, pulls up, pulls back, and then pulls up again. This is such a huge move. Eventually, you're going to say, I don't care who you are. You're hitting this. It's pulled back quite a bit. If you sat through that, a lot of people, as this pulls up, what's going to happen is you're going to move your stop like this, and you're going to get you'll get stopped down. So again, everybody's a little bit different on how they manage. It's easier said than done to leave it the room that it needs to breathe and move. Okay. So again, that's our zone that we need down there. And then we can actually go back out. Let's see. Let me take these off the chart. I'll take out everything that is not relevant. And what you need to do is look back and again, see if you can find areas, another area of support in here. Okay. We really don't have a lot except for we have this right here. So we have where this green candle pulled up and stopped, pulled down. This candle actually wicked to that price. This candle wicked to that price. Okay. So that's the level I'd want to use in between. And then just mark that as a, where is it? My 1 hour support and resistance level. It's because it's not off the 4 hour. It's off the 1 hour, 60 minute. And then I would actually come in here and mark this one. Somewhere in here, I want to look at these lows right here where it pulled up and kind of the lows here, you know, where this candle came down and closed. It's also where this one closed, this little green candle, you know, this green candle wicked right there. This green candle closed right there, same price. So this one opened right there. It's going to open where that one closes. But then this red candle comes back and taps that same price level. Okay. So that is a price level I want to be aware of. If we look to the left, we can see where this wick right here was right at that level as well. So again, that's a 1 hour. So that would be a price level to mark on the way down. Okay. And we can go find these all day, but like I said, don't get too many on there. And keep in mind, and this is why it's key to mark these 4 hour and 1 hour. A 4 hour support and resistance level tends to hold up and be stronger than a 1 hour, and 1 hour stronger than a 15 minute. So I don't like to draw too many of them on a smaller time frame because they get broken easy. They don't get respect a lot. So I would expect a 1 hour support and resistance level to be respected before a 5 minute, 3 minute, 15 minute. All right. So that's how you need to set up on gold. But like I said, right now it is retracing off this bullish move. How far it goes, I don't know. I expect it to turn at one of these levels if it's not going to turn and pull off of this. Okay. So you have to be prepared. Again, I do have a downtrend line off of this wick here and on down the back side of these candles here, which it looks like it's going to pull up, maybe go through. We'll have to see how that plays out the rest of the night. All right. So I'm going to go over Dow. I know a few people are trading it. It is one that I think I like the most looking this evening as I looked at ES, NASDAQ, Dow, and Russell. Okay. Those are the 4 indices. And I don't recommend anybody trading NASDAQ unless you want to throw money away. It's very hard to get used to trading. Even though these move similarly, NASDAQ moves a little more sporadically, and sometimes the moves are quicker. Well, a lot of times the moves are quicker. And it tends to take a lot of people out. There's a lot of liquidity grabs on NASDAQ, 100%. And the reason why is because it's so traded. There's so much volume in it. So it's heavy on the trade floor. So you're going to get that. So if you're not used to that, trade ES, Russell, or Dow, I recommend going out to a 4 hour and then a 1 hour and compare all 4 charts. Pull a 4 hour chart, pull in all the data you can, as many candles, and take that 4 hour chart, look at it, take a screenshot of it, and then, get it on the other 3 as well. And then look at those and zoom in, not just way far out, but zoom in on like what's happened in the last couple of days. What are we back to here? Monday. So what's happened in the last couple of days? Take this image, screenshot it, and go out to, the S&P, NASDAQ, Russell. Take the same image, time frame image, go back to the same time, take this same screenshot, look at them, and look at what makes sense to you. You guys know I trade a lot of different things. I don't trade everything every day. You don't have to. But I like to peek and see at what looks better to me, what looks more pleasing to the eye, what looks like it's moving better, and what looks like it's moving in a way that I could possibly get in and could possibly see my setup. I've got one guy I know that only trades NASDAQ, and he's hurt. Most days it's a loss. Some days it's a profit. Some days it's 3 losses and then one win, and then he calls it a day. I don't know why he doesn't quit after trade 2 of a loss. The win doesn't even, cover the losses at all. Not even 1 loss typically. So I don't know why he stays in that. That's all he wants to trade. I'm good at trading that. And it's like, well, you're blowing accounts. So no, you're not good at trading that. I've told him everything under the sun. It's like, dude, you're taking losses every day on this. You're blowing 10 to 20 prop firm accounts. Guys, I see this. I've seen it firsthand. I've been right there. I've been right there when a mouse has been thrown across the room, when he sat there and blown 10 accounts. So, no, you're not good at it. You're not good at all at trading NASDAQ. So let's try something else. There are other instruments out there. There's also stocks. There's Forex. I mean, there's other things to trade. So why put yourself through the agony? The only thing I can think of is he wants an excuse of why he's going to fail. He wants an excuse. So when he fails and people say, well, you tried it, you failed. Yeah, well, yeah, it's NASDAQ. And that's not what you want to be. If you want to make it, look at the instruments. Now, I'm not telling everybody to get 3 or 4 or 5 instruments. I don't. I look at all. I do look at all 4 indices. But that's after gold and oil and some of my Forex pairs. So I have a system set up. And the way I look and analyze, you guys know when I come in at 8 in the morning, it's gold and oil. So in futures in the morning, it's gold and oil. Those are the first 2 things I look at, 8 o'clock. I look to see if there's a setup. I will try and get in those. And typically I can get in those by 9:30, which is what? When the U.S. stock market opens. Well, what's going to move when the U.S. stock market opens? Indices. So if I'm in gold and oil, maybe pulled some partials and buttoned up my stops, well, then I'm going to look at indices and prepare for the U.S. stock market. Forex, I still trade Forex to this day. That's what I started on. The Forex market tends to trend a little better, and I'm not trying to get anyone to trade Forex, but it tends to trend a little better. It doesn't trend as well as it used to always. We used to get in some huge moves. We still get them here and there, but what I like is off the news releases. So, and we'll cover the ES. There was news at 5 a.m. this morning on it, on the euro, sorry. So when I looked at the 4, I basically saw we have this kind of sideways movement here. That's where we're at now. I mean, that's right where it is now. It's right in between these highs and lows in here are my green zone. And look at how many touches the green zone has. There's 1. There's 2, there's 3, there's 4. It went through. 5, touch, 6, 7, nice bounce. 8, 9. I love that zone. That to me is a key zone, key price level right there. I'm going to keep that on my chart until it's no longer using that. Can I draw one up above? I can. I can actually draw one, from say this high to the wicks here and use that as a zone as well. But where do you stop drawing the zone if you do this? If I take and draw that there, color it yellow, mid zone, I could see it bouncing in there. I think you guys probably can too. Bouncing in there. It might go up above like it did here, pushing for those all-time highs, but I could see it bounce around in it. But where do you stop drawing the top? I didn't really touch the top of the wick here. So do we stop there? Well, what about like right here? Where those 3 candles, that wick, that candle closed, this one open. Well, what about including that? That's a pretty wide zone to me. So I would not have a zone that wide. Okay. So that's why I didn't have a mid zone on here. We're floating without one. We have a lower zone. We have an upper zone. Until those are broke, it's more likely going to bounce back and forth in between. So it's been in a bullish trend. As we look back at the 4-hour time frame, bullish. From left to right, that's nothing but bullish. Yes, you have big retracements, huge retracement here, big retracement here, big retracement here, huge. Okay, uptrend overall, left to right. That's how you typically say we're in an uptrend. Look from the left to the right. Now it's definitely been up. Look at the price point of where this candle is and where it is now. Okay, it's definitely up. So that being said, if I want to trade with the trend, it's up. If I get a bullish signal, then I should trade long. If I plan to trade long, then and plan to trade every time it pulls back, I get in long. Pulls back, I get in long. Pulls back, I get in long. Well, then what happens? I'm trading with the odds in my favor. Okay, can it break this zone and pull back to this trend line again? Yes, it can. Okay, but if I wait and I'm on a smaller time frame and it pulls down and we wait, you guys have heard me say it starts to round over. It can do it up or down. So it pulls up to the top and it starts to round over. Even if you have a trend line, it breaks the trend line, it's rounding over. It starts to form lower low, lower high. Your trade short. If it comes down here and starts turning here, rounding over, kind of like an arc, you'll see higher high, higher low, you're in long. Okay. So, and then where's your target? My initial target would be this right here. That's where I need to pull partial. Somewhere in there, somewhere like right before it gets there is where I'd want to close partial. I want to secure profit. I'm here to trade. I'm here to make money. I'm here so that I can have a paycheck at the end of the month. If I don't, I've failed. I failed everybody. Failed my family, failed my wife. I need a paycheck at the end of the month. So the only way to do that is to secure profit. So if I'm in long and it goes up, I'm going to close out partial. I will let my runners go in case it breaks that support level and in case it keeps going up. Okay. And then if it's in a good uptrend and it hits the zone, I don't close my runners. Just because it hits that zone, I never close. I need confirmation that the move is over, that we're no longer going bullish. What kind of confirmation can I get up here at the zone? So it pulls all the way up, nice trending move, higher highs, higher lows, maybe even a trend line it follows, gets to that zone. Well, what is my signal that it's no longer going bullish? Well, it would need to break a trend line if I have one. It would need to start rounding over and I would need to see lower low, lower high. Then I will close, then and only then would I close out my long and get in short. Because what it could do, even if it breaks the trend line, this is where you need to have a criteria sheet and decide what you're going to do on a trend line break. If it's going up and I'm able to draw a nice trend line, let's go ahead and draw one. Let's say I'm able to draw a nice trend line. It goes on up. We're going to call that our up trade line. So let's say that's what it's doing. Okay, I'm going to hold my runner. All right, hold the runner. It goes up. Now, if it comes and breaks the trend line, how many of you are going to close your runner and sell? Is that your criteria for getting out of one trade, getting in the opposite way? I like to wait for the test of resistance. The resistance is two things. It's the backside of this trend line, and it's this zone. So if it does that, I like for it to come up and test that level, because sometimes it will do this. You guys have seen it, where it bounces up the back of the trend line. But you got out here. You got out on a trend line break. Okay. So I don't like to get out right when the trend line breaks. I like to wait for clear signal. It breaks the trend line. I'm still going to hold my long. And that means I'm going to get back profit, because if it just drops right here, it'll hit my stop. If I pull my stop up in there, that's just something you're going to do. I might get back. But if it keeps trending, I'm catching all those gains on my runners. So with my runners, I'm willing to lose back some of that profit, because I want to wait on the signal. So let's say it pulls back up here and tests this level as resistance, and then pulls down, and then pulls back, but makes a lower high, and then goes into lower, then we're saying, okay, we're bearish. Lower high, lower low, we're bearish. And that's when you would close out your long and get in short. Sometimes you give back a lot. Sometimes you don't give back hardly anything. It just depends. Because if you look at the drawing here, if I would have closed on this break, well, that's basically where I'd close and get in short anyways. Okay. Sometimes it's around the same price. Sometimes it's not. But that's what you have to say to yourself. What am I waiting on? What am I going to use as my reverse criteria to get in the opposite direction? But I like where this is going. I would trade this right here just as a zone. That whole area right there. You don't have to draw a line like this, but normally I'll have a range trade zone like that if I'm trading a zone on a 1 minute. I do that so that as I go to a smaller time frame, I know what I'm trading in. So if I was to come down to a 3 minute or 1 minute, that is what I'm looking at right there. Okay. I have the zone in a certain color, and it would be purple is what my range zone is. And that's just to trade it up and down as it goes back and forth. Okay. You guys don't have to do that. You can pick your own color. You can make them clear in the middle. It really is up to you. But right now, like I said, where it's at, I love that it's in that zone. So I'm going to look at trading this, but probably not until U.S. session. So 9:30 a.m. Eastern. That would be tomorrow morning. I'm going to be out. So if I trade it, it is going to be on the phone. So I don't know if I'm going to mess with that or not. It really depends on what happens throughout the night. I'm not going to look at this again till morning. I know what I see now. Okay. Right now, it went up, made a high. It's pulled down, made a lower low than this, lower high, lower low. Right now it's bearish still. It's still pulling toward the bottom of this zone. Okay. Let me take this purple one off there. So right now it's bearish. Did I not grab it? All right. So right now it's bearish overall, but it is tapping this zone. This zone is holding up as support. So I don't know what's going to happen again throughout the night, throughout the rest of the Asian session and then the London session. And I don't really care what happens on this, but I know what I see now and I know what I'm thinking now. Okay. And I've got my if then scenarios. If it breaks through this green zone, where do I think it's going to go? I mean, I don't think you guys need me to point this out to you. I mean, if it, breaks through the zone, I think it's going right there. Not right to there. All right, it could go right to there. But you know what I mean? I think it's going to the trend line. Okay? So it's got a couple levels. I'm on a 4-hour time frame. It would have to break the green zone. This is an old support and resistance level. It's an old all-time high. Okay? So, and that's how it's marked. So that is an old all-time high. What's this one? That's a new all-time high. So if it moves up above this level, I'm going to mark this as what? I'm going to mark it as a old all-time high. Okay. Those are key levels. Those are key prices. For some reason, it stopped there. I mean, it stopped right at that price level. I need to be aware of that price level. Okay. Before it stopped at this price level, kind of monkeyed around it. It really didn't respect it very well here, did it? I mean, it didn't. I mean, it popped up past it, a couple candles floating around it above and below, but ultimately no real good swings that like this one. You look at this swing down, it really respected that top of that zone. I mean, it just turned right there, and we didn't get that in here. Didn't really respect it too well. So I don't know if that's going to hold up or not. So ultimately, I would want to come in and mark this level here. This wick basically marking these candles here. And that is something I need to mark as a 4-hour. But ultimately, it needs to break through. If it breaks through all those, if it can break through all that support, then yes, I think it's going to go to the trend line. But it has to break through all that. I mean, it can't get to here. It's like a football game, guys. And I don't watch a lot of football, but in order for it to get here, to make a touchdown, guess what? It has to go through everybody. It has to break every one of those levels. It's not going to go down easy if that's what happens. Never does. It just like if it turns and goes up, it's not going to go all the way to this zone easily. It has to break this level, has to break this high, has to break this high before it can get to that zone. So there's a lot of things in the way. And that's what you have to prepare for and be ready for. So again, put that one away. Just know where it's at, know where the zones are, and get ready to trade tomorrow morning. Pound. So now I'm going to get into two currency pairs. We'll cover the British pound and we'll cover the euro. These are two that most people trade. These are the two most widely traded currencies around the globe is the British pound and the euro. The pound and the euro move together. They're kind of in sync. However, the pound tends to have bigger moves, a little bigger swings, bigger candles, and it also moves a little more sporadically. So the only thing I can relate this to is the ES and the NASDAQ. The British pound here is like the NASDAQ. And the euro is like ES, S&P. The thing is, too, that it costs more per trade to trade the British pound. So when you look at the fees that are involved, the euro is the least expensive to trade. It is across any broker. The euro is the least expensive to trade. Now, I'm talking about the majors. I don't know about all those other currencies and all these foreign countries. I'm talking about the 7 majors. The ones that are tied to the US dollar. Okay. So when you look at those, that's all you need. You don't need to trade the Mexican dollar. You don't need to, there's just so many currencies. Now I'm talking about the euro, the pound, the Swiss, the Canadian dollar, the yen, the Australian dollar, and the Kiwi, which is the New Zealand dollar. Okay. Those are the 7 majors. There's times to trade them. When would you trade the Australian dollar and the New Zealand dollar? You would trade the Australian dollar and the New Zealand dollar during the Sydney session. That's when you would trade them. Can you trade them at all hours of the day? Yes. You can trade any of those anytime during the day, from Sunday night to Friday afternoon. 24 hours a day is the market. So you can trade any of those. Should you trade any of those at any time? I don't believe so. That's not the way I was trained, for one. I like to stack odds in my favor. The odds are that if I trade the Australian dollar and the New Zealand dollar during the Sydney session, that's helping to stack the odds in my favor. Because when the market opens for the Sydney session, guess what currencies they're focused on? New Zealand dollar, Australian dollar. It's not a surprise. So I want to trade those. When I trade the Asian session, what pair does anyone think I'm trading? What currency do you think that I'm going to trade during the Tokyo session, Asian session? I'm going to trade the yen, the Japanese yen. That's it. It's the only thing I'm trading. Now you can trade the yen tied to the US dollar. You can trade the yen tied to the British pound, the Swiss franc, the yen tied to the Kiwi or the Australian dollar. So you can actually trade each currency for that session, like the yen for the Asian session. Yeah, JPY. You can trade it against everything. It has all kinds of cross currencies, like not just the US dollar, but the pound, the Swiss. You can trade during the Sydney session. You can trade the Australian dollar against not just the US dollar, but the Swiss franc, the yen, the pound. Okay. You can get totally lost and carried away. So if you do look into currencies, here's what I recommend, because you can get totally lost when you start going, I have no idea. I want to trade the Asian session because it's night and I work. Let's say you work during the day and you want to come in and try trading something tied to the Japanese yen at night, but you don't know. I recommend sticking to the yen versus the dollar, the American dollar. Okay. The US dollar. That's one of the majors. That's what I recommend. You can branch out later if you want. I don't recommend you starting with the yen to the British pound. It costs the spread on that's wide. So you're going to pay out the yang for trading that pair. And it does move a lot. You can profit a lot, but it also costs a lot more. So I just don't recommend trading the yen against the British pound. So I would recommend yen versus the US dollar. The Australian session or the Sydney session, I recommend Australian dollar or the Kiwi, New Zealand dollar against US dollar. London session. So you can get into trading the euro, the pound, and the Swiss. Those are the three. So if you're taking notes and whatever coast you're on, whatever time frame you're trading, some of you guys are trading the London session because that's 8 a.m. for you guys. So at 8 a.m, if that's when you're trading is the London session and it's 8 a.m. for you, then that is when, for me, it's 3 a.m. I used to get up and trade it every single day. That is the Swiss pound or the euro, one of the three. And then you guys know that I consider myself a market analyst with fundamental awareness. That's what you need. You need to know when the news releases are coming out. So that's just you being a market analyst with fundamental awareness. You have to know when the news releases come out. Okay. Yeah, they do. So they mentioned the Swiss pairs trade along the lines with gold as well. So I love the Swiss. I love all the currency pairs. I don't trade them all anymore. I have my favorites. And guys, the Canadian dollar is tied with oil. So if you see news hitting for the Canadian dollar, you will see oil move. If you see news hitting for oil, you will see the Canadian dollar move. We get a lot of oil from Canada. So that's something to keep in mind, but that is also tied to oil. So this is the British pound. So you would expect it to move the most between the London session and US session during those times. There's an overlap. So when we get into any trading, there's an overlap between sessions. Currency pairs, it is huge to know the overlaps. So the London boys, the big boys over in London, the market movers, when they are taking lunch, they get started, it starts 3 a.m. my time. So they take lunch about the time the US market is getting ready to open here. So what happens is the London boys go to lunch. When the London boys come back, and that's just what I call them, the London boys. When the London boys come back from lunch, the US market's opening. Same time. So with the Forex pairs, you have a lot of what? Well, you have a lot of market momentum. You have a lot of market makers, market movers that are trading these currencies. And the thing with currencies, it's not retail traders out here trading. This is the big banks. It is also, this is something that is really important to keep in mind and know. I've seen big orders flow from one country to another. And I'm not talking currencies, I'm talking car parts. And I've seen big orders over the years where there was a big order from the US buying car parts in, where do you think? Japan. That Japanese company does not want our US dollars. They just don't. So what has to happen? That US company that, let's say, is putting on a multi-billion-dollar order of car parts in Japan, guess what they have to do? They have to exchange their money. They have to exchange their US dollars that the Japanese company does not want into Japanese yen, which the Japanese company will take. What does that do? That will actually move the market. That will move the currency pair. Just that one corporation. So it can happen. So it's not just, again, retail traders, brokers, banks. We have the 7 major banks. Yes, they move the market. We've got hedge funds. We've got bots now. You've got AI bots that are trading in and out and in and out. Not just, and I'm not talking about the little teeny bots trading for the retail brokers. I'm talking about the bots that the hedge funds are using, that the corporations are using, the big banks are using. They have AI trading along with their regular market traders, but they're also using AI. So that's changed the market a lot. We're going to see the market change a lot in the next, over the next decade. And a lot of that is going to be due to AI and the bots, because nobody can predict what they're going to do over time, because some of them are also built for learning. So just look for things to change. But overall, currency pairs are good. I'm not trying to get anyone to trade them. If you want to trade them, I'll help you. We'll analyze some pairs for you. But overall, keep in mind that your market overlap, again, so if you're in the US, what hours are that? Well, the London boys are coming back from lunch. The US market is opening. So 2 markets overlap, okay, where we have all the fund managers and everybody, the big banks, everybody, they're overlapping. When does that stop? You guys have heard me say, I really only like to take trades the first 3.5 hours of the US session. Does that make sense now? I know some of you have heard me say that multiple times. I really only like to take trades the first few hours of the market. After that, I'll manage my stop, maybe close some partials, but I don't want to really look for more trades. Do you know why? Does that make sense now? Why? Because when the US market opens, we have the London boys coming back from lunch. Around our lunchtime, guess what they're doing? They're clocking out. They're going home. So yeah, it's about 3 or 4 o'clock their time in London. So you have the market makers over there shutting down for the day around 11 o'clock noon our time here in the US. Eastern, sorry. So what that happens is volume. What does that do to our volume? It dies down. We have half the market leaving. Okay. You got the London boys, you got the US traders, US market makers, London market makers, all trading together about that 8 a.m. to I like 8 a.m. to 11 a.m. Eastern Standard, 11:30, and then call it quits for looking for doing trades. That's why. London boys are shutting down. US, they're going to lunch. The big market movers, senior traders, for the big corporations, they're all shutting down for lunch here. They're going home overseas. What does that do to volume? The volume dies. Can we get spikes here and there? Yeah, we got all kinds of other stuff now, like AIs or corporations, or, there's countries making big moves as well. You guys know you can go on most of the bank's websites. You're supposed to be able to go into all and see where they invest. And you can see that a lot of them do invest in the Forex market. It's no surprise. But again, volume dies down. And I don't like trading when there's no volume, because you need volume to move the market. Volume moves the market, creates the momentum. That's what we get our money off of. That's what we get a part of, or get all of. Depends on where you get in. All right. So yeah, we do trade platinum and oil. Oil's a big one. I trade platinum once in a while. MC, who I think I saw MC in here earlier. Yeah, MC does platinum, like solely. I think MC is just getting into a couple other things, at looking right now and possibly getting in. But platinum's the focus for MC. So yeah, in our Discord, I know MC posts in there on platinum, and trading the 1 hour time frame for entries. And I'm down on the smaller time frame. And but MC's on platinum, trading it 1 hour and early morning, taking early morning trades on that. So again, on the pound, there's multiple times to get in on this. That's why I wanted to go over this one. You could just see the nice up and down swings. Look at any instrument you look to trade in. You should always go back and look at the moves. What does that look like to you guys? It looks beautiful. That's all I can say. Guys, I can't. It just looks beautiful. I mean, even down here, I mean, it bounced, lower high, but the low is right there. Lower high still, higher low. It just flat, but a decent move up. It turned right here. How do you know it's going to turn right there? You don't. Would you have had a trend line? Would you have had a trend line up here that was broke? This is why I say don't ever, and I don't. Someone asked me today, I think they were new, and that's ask all the questions you want. Ask if I get it in on a trend line break. I don't. I need more confirmation. So it broke, pulled back a little, went short, but it rode up the backside of that trend line. So once this push up here happened and it pushed past that high, what do? You have to move your trend line down. You move your trend line there. Over here, when it broke that trend line, what did it do at the same time? So it came up, made a higher high, made a low, higher high, higher low, higher high, higher low, higher high. When it came down here, what did it do? It not only broke the trend line, boom, there's partial criteria met to take a trade, but it also broke the low. It came down and broke the low. So when it broke the low, what's it doing? When this candle pulled past that wick, when that candle closed past that wick, it's making a lower low. That's your sign. I mean, it is lower than that. Can't change its mind. It's already happened. So it's making a lower low, bearish signal. So you might have got in on that. You might have waited for a pullback to get in, but a decent move down, a decent swing back up. This one was kind of squirrely. It had a nice move down. So this would be a retracement. You guys see I already have a trend line here to here. Okay, and then you would have a trend line from here on up, which got broke. This is a retracement that went here and pulled back up. But look back at the moves, pick an instrument or two, pull back and look at the moves, and can you trade it? Could you trade this? Go look at the euro and anything. Look at oil. If you've never looked at oil, look at oil. Look at ES. Look at, Bitcoin, Ethereum, XRP. I looked at XRP the other day because someone mentioned it. Can you trade them all? Yeah, you can trade anything. What I like to do is look and kind of scan them in the morning. So with the currency pairs, I don't necessarily have to scan the currency pairs. I'm looking for news releases that are coming out. Why? Because news releases will actually move the market. Not the news release itself. Is that not going to show up like that? That's not. I'm sorry. I tried to pull a calendar over, but it's not going to show. So we actually have 8:15 a.m. Eastern is non-farm payroll tomorrow. Okay, so we know things are going to move. Doesn't matter what you're trading, it's going to move. So what I like to do on that is currencies tied to US dollar and gold. I like to do gold on non-farm, and I like to do euro or pound tied to the US dollar. One of the two. I won't try and trade multiple. You don't have to. All right. But right now, the pound broke this trend line. It also broke the low. So it's made a lower low. It's pulling back. So what I'm going to do is I would actually set some alarms on these lines, and I'm going to wait for a pullback. That's how I would trade this if I'm looking to get in it tonight. I would wait for it to pull back and look to trade it short. Okay, because right now it's pulling off that. But I don't care. It tapped this almost 4 times up here and pulled down, made a new low. It's pulling back up right now. How high is it going to go? I don't know. But it may just pop up to here. So it may just pull up there. It may go a little deeper. Okay. But ultimately, what we want to see is it to either turn here and start to turn down. And again, I'd be on a smaller time frame. So on a smaller time frame, I would have a trend line drawn up here. I'll go down and look to see if we can draw that trend line. So it might just go there and bounce, or it could ultimately go up to here and bounce. But ultimately, I'm looking for a short on this. Okay, I'm not looking to go long, but it has to break. It has to break a trend line. Oh, I can't really go down to a 3, guys. It looks horrible on this charting. And that's because it's on the futures. Yeah, it looks bad. So right now, I really don't have a trend line to draw, though. I mean, I could draw one from here to like that. And we'll see what that does. I'll leave it on there. I don't know if that's going to hold up or not. But ultimately, what I want to do is see it go up, hit one of these price levels that was on the 4-hour, and hit one of these price points, either this one, which is off this low, or up here. Hit one of those levels, start to turn, round over, give me lower, low, lower, high. All right, so let's get to the euro. So the euro is something I traded today. I need to get off the 4-hour here because I was not on the 4-hour. I've got the trades kind of marked. I had a zone down here, zone up here. Basically, this was like Wednesday of last week. It had pulled back up toward that zone. So when it gets up to the zone, you'd think short. I should short. If it ends up breaking the zone, well, you'd have to look to go long, especially if it's making all-time highs. So that's how, let's see, I was not on a 3. I was on a 5 because my other platform only has 5 and 1 minute. So MetaTrader 5 platform. And that was the first entry I took. So ultimately, let's see, man, I've been saying ultimately a lot. I got to quit doing that. I'm going to put the grid on here. All right. So there's the 5 a.m. candle right there. And news came out for the euro. So it pushed up a little bit off that, but ultimately it was in a nice downward move. So when I placed this fast, I had one eye open, and I did it on the phone because I was not awake. So I woke up, looked at my chart. It was like 5:15. So right there was a red candle. And basically, I didn't draw this, but I can see it. So I recommend always drawing your lines, but over time, you'll just see them. I mean, you could definitely see that this is a pullback. This is a pullback, pullback, extension down, pullback, extension down. And that's what you get. You got a pullback, you get an extension down past the previous low, which means we're making what? Lower lows. So lower highs, lower lows, bearish formation, pulls back, and then extension past low. Well, what'd that do? That created a lower high, and on the extension creates a lower low. We know that once this candle here closed past that low, it's lower than this low. Again, it can't take it back. It's already pushed through. So it's making a lower low. Okay, so then we get a pullback, extension past the previous low. What'd that do? Lower low, lower high. So it pulled back. I could see the pullback, nice green candles. I could have taken the time to come in here and drawn a retracement line up, and even take the time on the charting and come in and do retracement up, which makes it short. I don't like my retracement lines extending, way out here, but I didn't need to. I saw the pattern. I saw that it was making lower lows and lower highs. Okay. So as I see that it's doing that, lower lows, lower highs, when it pulled back, I saw red candle when I opened my eyes. That's the first thing I do is pick up my phone. And I saw the red candle and I was like, this one opened. I'm like, I'm in. I took the trade short. Where's my stop? One, you can see I have a 4-hour support and resistance level there. That was already on the chart. But two, I don't ever use the exact high right there. Something like that. That is not my stop. I don't ever, 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 never, ever have I ever used a candle wick or body. I have never. I was taught better than that. That is not how I was taught to do it. You're asking for it to come back, touch your stop, and move without you. If you place your stops like that, just look back at your trades. Hopefully you're running a trade sheet journal and you ought to know how many times it's happened to you. I don't. So here's what I like to do. 1 or 2 highs back for a short. This is the current high. This is not 1 high back. This is the current high it just made. 1 or 2 highs back. 1 high back and never on the candle. So it'd be more like that. 2 highs back. And again, never on the candle. It would be something like that. I like to give them room because I've seen a lot of times where like this could have very well ran up the back side of this line, touching this one, and that could have been where it turned and went down. Okay, all that is then, if that would have happened, if it would have finished this and went all the way up here and then turned and went down, what is that? All that is a move down here and a bigger, deeper retracement. That's all it is. So I like to give them the room. So you have to decide. This is something with your trade management. And don't wait till tomorrow morning when you're getting ready to trade, or don't wait till the London session when you're sitting down at your desk and you see a perfect entry, 100% or A plus entry. Don't wait till then to decide where you're putting your stop. You decide now. Decide when we finish this live. That's something you should decide way ahead of time. How are you going to manage your trade? And again, trade management is just as important as your entry management or criteria. So again, I like to go 1 or 2 stops. I don't always go 2. It depends. This one, I think I went 2 back on this, but I'd be comfortable going 1 only because I have that 4-hour support and resistance level there. Okay. And that being a 4-hour support resistance level, I'm on a 5-minute time frame. When I entered right here, look at how these candles rode that 4-hour support resistance level. So do you think that's a safe level? In my mind, yes, that's a pretty safe level. Now you got wicks here. That's why I just chose to just take that little bit of hesitation out. All right. Just put it out there. So that was the first trade. All right, guys, I forget how much I was out, and I can't pull Discord in here because it won't show for some reason. I posted them out in the Discord. I know one of the trades was up around 6,000. I moved my stop about halfway, and then it stopped me out. I think this stopped me out here, if I remember right. I moved down. Guys, I can't remember. You'll have to forgive me. I'd have to go but look at the Discord, and I don't want to take the time to do that right now. But I think that was the one I closed off. I put 40 on. I know I put 40 on because that's what I'm trading on that account. And I want to say I closed out 30. I think I did. So when it was up about that 6,000, and it was, and it was down in here somewhere. I think that's where it was. I don't think it was this push. Anyways, I closed out 30. I moved my stop, and I just tried to go back and look, but I can't see the other pictures because I had a problem uploading a bunch. Closed out 30, moved my stop, got stopped out. And I didn't trade again till here. Now, here's what I did on this, because it looks like I just went and got in on a green candle, and I did not. I went to the 1-minute time frame. Now, I'm not sure how it's going to look on this since this is the futures. This is Euro futures, so see how it looks? It looks like trash. But there was red candles. I was on a 1-minute time frame. Right there they are. These 2 red candles. So I thought, okay, it's pulled up this level. That's a 4-hour, what is it? 4-hour support and resistance level. So it pulled up to the 4-hour support and resistance level. I thought I was golden. I mean, I did. I thought, man, I'm golden. I'm getting in. 2 red candles. I'm getting in. And I jumped in. Now, what did I ignore? Anyone even see that? Can you see what I'm missing? Hopefully. I don't have a trend line. I don't have a retracement line. There's 2. 2 points. There's your retracement line. I traded right here. I took a little risk, but I had locked in so much in the morning. Okay. So that trade was like a little around 6,000. I closed out 30 lots. It was around a little over like 1,100, I think, when I closed out the 30. So I'd already locked in about 4,500, 4,800, somewhere in there. So I had already locked in quite a bit. So I went ahead and jumped in it. I'm like, I'll go ahead and take the chance. It's a 4-hour support and resistance level, jumped in, and what did it do? Well, it pulled back. So I was in the negative for a while. So I was in the negative when it pulled back. All right. And then finally it went through, broke the trend line, pulled back to test it, the retracement line, pulled back to test it, and then moved down, and then eventually even moved down further. Now, let's go back and look at the stops. Where do I put my stops? I go back several levels and never put it to the tick. This is a first level, right above where I got in. Okay. Again, you would never go current high you're forming or just form. Go back. There's back one. Would have been stopped out. Would have been stopped out before what? Before it went in my favor. Hate that. Go back to the next high. Again, I don't go right to the tick, but there's to the tick. Would have been okay. Would have stayed in, but almost was taken out before it moved in my favor. Again, this is where I put mine, right where I had it marked. I give it room. So giving it that extra room, there's no question I was safe when it pulled back here. I mean, you can see that. Again, if I had it here, that was a close one. Almost got stopped out before it went. So again, I like to go 2 levels back. And then when you're adjusting, and guys, that's part of trade management. Where do you close out partial? Where do you move your stops as it go? I'm a little bit lenient with my stops in Forex. I like to give it room only because I know how they move. I've been trading them long enough to know typically how far back. I like to go 1 to 2 levels back always. So as it pushes here, I don't do anything with my stop. Okay, when it pushed down here, I don't do a thing. My stop is where it was. I just leave it there. I'm willing to take that risk. When it pulls up and then pushes back down and makes that lower high, well then yes, move your stop. I'd move it here above that high. It's giving it room. I'm giving a lot of room. When it finally monkeys around in here, when it finally comes down here, breaking this low, what's it doing? Well, when that candle closes below that low, we're making new low. I know I should be safe moving my stop. Then I'd move it here. Okay. Pushes down, starts turning. Now we know we have a set low. It's turned on the inside of this bottom, inside bottom. Pulls up. When it turns, we got some red candles here. We say, okay, I think it's done. It's forming that lower high. Should be safe. Move your stop above that high. Keep it the room. Give it the room. Because look what happens if you pulled it there. Almost stopped out. Okay. So give it that, go 2 back. Made a lower low, pulled back, starts pushing down. Again, if you're aggressive, if you're using the tick of a candle, you're almost getting stopped out, or you are getting stopped out. Okay, so just don't, that's a no-no. Give it room. So you give it room. And then it finally, when it pushes down past this low and also breaks the 4-hour level, well, then we know, okay, it's really making that lower low. Now we can move it above this one. You could get aggressive. Once it broke the 4-hour level here, this low, you could get and move it here. I wouldn't do it right when it's here. When it's here, that should be where your stop is. When it breaks through that 4-hour support and resistance level, this level here, then you can move it here. Give it a little bit of room. And there's no certain tick amount, guys. You'll get used to it over time. Everybody's a little bit different. Sometimes I like to go about 40 ticks off of a high. So it just depends. If I don't have a previous high, like if we've made all new highs, then I like to give it a lot of room in case it wasn't quite done, reaching for the stars. So basically then pulls down, pulls back. So we had that extension, pull back, and then we get another extension past this. Well, then that is what? A lower high. So there you go. And you could see what happened. You get stopped out. Eventually, you're going to get stopped out on the move. So that was the second trade. And that was the last trade, I believe. Yeah, I did not get in yet on any of this. But that all started off of a 5 a.m. news release that didn't really have a lot of momentum behind it. This was it right here. That one red candle. So really not a big move, not a lot of momentum on it. And plus it went to the bullish side. But overall, again, the trend was down. The trend had been down with nice lows and nice highs. So that's how that particular trade panned out on there. All right. So again, I just wanted to cover the Euro trade because I know I posted it in there. Again, I'm not trying to tell anyone to trade Forex over futures. You guys have to decide on what you want to trade for yourself. I like a mix. I've traded Forex since 2004 and just started looking at futures last year. It was gold and oil only. Actually, it was NASDAQ first. So it was NASDAQ and trading with a friend that only trades NASDAQ. That has a lot of issues with it. And I've tried over the last year and a half to get him to trade anything but the NASDAQ. And he just keeps telling me, no, I have it under control. I can trade it. And the thing is, he's watching some YouTubers. They do Instagram, YouTube. That's all they trade NASDAQ. And he tries to trade with them. He gets killed. He gets slaughtered. And some of those guys are actually on like 10-second charts to keep. You guys got to be careful. I don't do that. I trade on the 3-minute, sometimes a 1-minute. You'll see my charts. Some of those guys, you'll see their trades. This is just something to kind of be wary of. I'm not saying everybody does it, but some of those guys, you cannot see what time frame they're on their chart. They won't show you. It's just not visible, that corner of the chart. They're on a 10-second or 20-second chart. They're down to the seconds or a tick chart even. Why? It's more exciting. If you come in and watch me trade, and we've done it before, where we've been in there for like 2 or 3 hours on a weekday morning, and I've been in some trades on gold and oil, and we've watched the trades. It's very slow. It's not exciting. If I jump down to a 10-second chart or 20-second chart on NASDAQ during the start of the U.S. session, it's very exciting. I've done it before, and it creates good content. Can you trade along with that person? No, because one, you don't even know what they're doing. And before you know it, they're in, they're out. So you just got to kind of take it as a grain of salt, I guess, with what you see out there. Yeah, you can go down. I've done it before. I've gone down to the tick charts and trade them. And you can do it in Forex too. I don't recommend it. I would only do it during news, but a 1-minute chart is fine for news. You don't really need to go any lower than that, but tick charts are dangerous. So anyways, for those that are new, pick what you think you want to trade. But I recommend looking at multiple instruments. Gold and oil seem to be good ones. A lot of people like ES over NASDAQ if you're wanting to trade an indice. Bitcoin's fine. I do some Bitcoin platinum. I know MC does platinum and is looking at maybe doing a few others. The Forex currency pairs, I can't say enough about those because I've made a living on those. So they move a little bit better The setups are a little nicer. They come more often in the Forex pairs. So again, if you're wanting to start looking at them, look at them. Forex.com is a great broker. I don't get paid to say that, but I've been with that one broker since 2004. I have never had an issue getting paid with them, and also have IRA accounts set up that get piggyback traded on my other, my live account, my real money account. And you can do that. So you can trade one account, your IRA account, if you're in the US and you get like a Roth IRA, you can lock them together. And when you trade one, they both get traded. And you set it up to where it doesn't matter if one's smaller than the other, it'll adjust the lot size. So what I do recommend again is kind of do what we did today. Look at the 4 hour, 1 hour, look at instruments. Again, for me, the start of the US session, 8 o'clock in the morning, I'm trading a currency pair if there's news, typically the euro or the pound. Also gold and oil. I'll look at those. That's 8 a.m. Eastern. 9:30 Eastern, U.S. stock market, I look at indices. That's going to be the Russell, NASDAQ, S&P, and Dow. I'm going to look at those. I'm going to look first, scan the 4, and see which do I like the best. What do I think has the best possible setup? What looks more pleasing to my eyes? After all, I'm going to have to sit there and stare at that chart for a while. So what looks like it's moving a little bit better, that if it pulls back might give me that good entry, okay? Or if it breaks support level or breaks a resistance level, it's been moving so nicely that it looks like it might pull back, after that. And we have a better chance of getting a nice setup, is what I like to do, is scan those 4. Bitcoin and platinum, I just kind of look at them in the morning and then decide if it's something I want to get involved in or not. And then I might throw a contract or a few on them. With platinum, you cannot trade minis. So it's one contract on that. So keep that in mind. But that's how you kind of want to go down to it. So that's what I wanted to cover. We'll be back. I'll be back tomorrow night. And I'm going to look and see. I think we have news tomorrow night as well that may affect some pairs, but we may actually come in and trade the Asian market. I'll have to kind of look and see how things set up. So tomorrow night, we may do more trading through the Asian session, and I might be doing it on the Japanese yen, just so you guys can see. Asian session is kind of boring. You don't get as big of moves. So that's something else to keep in mind. Trading the Asian session is fine. So if you're working during the day, sleeping at night, working during the day, the only time you can trade is the Asian session. That's fine. Trade it. It doesn't move. The moves aren't as far. So keep that in mind. How many ticks or pips can you get? It's typically like 45 to 50. So if that's all you typically get, it's like the average true range. You can put that on charts and see what the range is for like the last couple of days. So if you know that typically it's only going to move, say, 40 points or pips during the Asian session, then what should your target be? Where should you close partial? Maybe 30, 25, 30, close partial, leave runners on in case it does go 50, 60, 70. So during the London session, if it tends to move 75 to 100 pips in a currency, well, then what should you expect? About 75 to 100. So I don't come into the Asian session, which say a currency pair tends to move, say 40, 45 pips. I don't come into the Asian session and go, oh, I'm shooting for 200. I'm not moving the market. There's no way that I'm going to make it go 200. So the market could care less about what I'm doing over here. So I'm not going to shoot for 200 because it doesn't move 200. So you have to be realistic with your targets. What does it normally do? It moves 40 typically. Okay. When it moves 30, I'm going to close partial. I'm going to close, I'm going to put, 40 lots on and close out 30, when it moves about 30 pips. And after that, I'll move my stop to break even, let the rest go to bed. Okay. And then wake up in the morning, see where I'm at, modify my stop, that type of thing. So once you make all these decisions and know what to expect and can make the decisions and make the plan to say, okay, here's my entry. I'm looking for all this criteria to get in. When I get in, I already know when I'm going to move my stop, when I'm going to close partial, when I'm going to close the whole trade. You already know these things because you already have mapped out. So do it before you ever sit down and trade. All right. So I hope you enjoyed. Again, I won't be in the morning. You'll see me pop some trades in. I don't know if I'll be able to put pictures in because I could not tonight. I'll look out at my trade because I am in one in gold. I didn't hear my alert go off, so I think I'm still in it short on gold. So I'll pop that on and pop it in Discord. So I will see you guys then tomorrow night back in here. Have a good evening and trade safe.